Hello, good morning. I've decided to give up my discretionary trading because I found it too much effort and too much energy and time consuming in watching the market day by day and minute by minute. It's really very bad for my wealth, although it is also not good for my health. And okay, now let's see what I've used now. I was decided to use the mechanical testing, mechanical trading, and of course with certain kind of programming. Now it's a kind of systematic trading. I would make the testing of my strategy starting from the beginning of this year up to today and see what happened if I invested 1,000 US dollars at the beginning. And I'll get a start for the uh, testing. Okay, that's the result, the very fast, okay? That is the back test result. And then the graph can show that with the initial capital, the equity and the capital would increase, and that by the end of the year, with this amount. And this is the data, the breakdown data is $1,000, and that you get a net profit of 665. And it's all this kind of data given by the program. You can know what is the drawdown level, and not too bad, 8% and around 17% with equity. And the payoff is at 14.8, and also the percentage of winning trade, okay, that's 33%, and loss trade, oh, much higher, 66%. But if you compare the payoff, that you have a positive result. Of course, this is kind of you can plug in a figure in the Kelly formula, and this is a profitable system. And also you can know what the percentage of money they can invest in this kind of system. It is a kind of gambling system. Okay, if you can find a kind of a gambling system that is the positive expectancy, then it's the good system. Otherwise, it's the losing money system. Don't use it. Okay, now, although it looks very good for this year, but I can tell you honestly, if I make a longer period of maybe 2 years, 3 years, or 5 years, or even 10 years, the system will not lose money, but also will not give you a tenfold or a very huge amount of money. It's not possible. But at least it saves you a lot of energy and time. And also, as I mentioned earlier, it's not good for your not too good for the wealth, but it's too good for the health. I really cannot afford to spend hours and hours in the market again, and this is the only way out. Is a kind of hope, at least for increasing the money, the increasing the capital, but it is not fantastic. It's not a miracle formula, but it works anyway. You know what? It comes back to the technical part. What is the strategy that I use in this system? First, I will use these kind of indicators first. So the ATR is used to determine the level of the stop loss. The principle is simple. If the loss ATR, you should have a wider stop, okay, because of the volatility. And the ADX is a very good tool. It's not the only tool actually to determine whether the market is trending or oscillating, meaning the ranging. But if you have a high ADX, it means the market is gaining momentum. It is a kind of a trending. Then I will use the MACD indicator. If the value crosses above the signal line, then I was long. And if the crosses down the signal line, I was short. Okay, but if the market determined by ADX is ranging is sideways, I would use a very good, if not possibly the best indicator for ranging market. That's the stochastic. If that is say if the overbought over yeah overbought here and across down, then I was shorted, and if it oversold and recovery above the signal line, then I was long it. All in all, that system works. Okay, although it's not a very fantastic one. Okay, but for this year, it's really good, and I will continue to use it and for the see what's going on for the rest of the year. Thank you for listening.